bear and nothing to win, nothing to win. Could you believe? Could you believe? Could you believe? Could you believe? Take my hand, I'll take you higher than you've ever been. You've ever been.
Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share, an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same, bringing without wasting a single second of your time. Bada bing, bada boom, we go into the charts. So Bitcoin got a little bit of a push to the upside with that pinged liquidity that did come in up in that 30,000 range, closing out just beneath the in-between zone of that daily support resistance of 30,270 and 29,657. And yeah, of the diagonal pitch fan, we are making our way over to that 0.5 equilibrium level. And let's go into High Block Capital to see what the liquidity has in store. What is High Block? Well, people lock their liquidity into the charts to get burnt to a crisp by the market maker. We get to see where those juicy characters get burnt to a crisp or lie in wait. So let's see where they lie in wait today. So yesterday we were putting out an idea of coming up to this region because of the stacked liquidity and the 109 that got pinged in as it spiked down and immediately started to come back up here on the live. And we also had the 4 time frames oversold idea and said we could possibly come up to this. I wasn't taking it because it was the weekend, but it did play out, and as such also pinged in a bunch of longs in the process, as opposed to the shorts, which are fewer and far between by comparison. So it could be just being a false move Monday, stop hunt rise, drop to the downside, similar to what I put out yesterday, coming back down to these regions after clearing out all of these shorts. And now you have less shorts to pay as you make your way down to these longs that are hoping for it to go up. See how it works? They go up to stop out all the shorts, and then they come down to the longs that are hopeful of it going up, and then there's more longs now to the shorts, and you see that imbalance of $1 billion on the 1 minute time frame. Let's expand our vision to the higher time frame to see if there is a change in the structures of the 7-day and whatnot. Shout out to everyone here. What's up, CNC in the house? On the 7-day, we are still seeing an ambiguity which has been displaying itself since we did have those hits to the upside and the downside. We have seen it is getting thicker on both sides though, as the liquidity starts to ping in. Monday is the attack at the liquidity to try to see where the move for the week shall be displayed. As it shows, it looks like there might be slightly more to the upside than the downside on the 7-day. Let's go to the 1 month. 1 month, of course, has the liquidity down below. We already went over this. The $20 billion at 29.3 and the almost 20 billion at 29.2 and 15 billion at 29.1. Even 12 billion double digits at 29 even. Although even coming to just 29.2, half of that would be sufficient in my book. On the monthly time frame, you are imbalanced to the downside by all the yellow regions indicated here. Are you coming up to take out some of these 100xers before they go into that region, into the monthly liquidity pool imbalance? Let's go to the 3 month. 3 month also suggests there are thicker regions up in the vicinity of the 32k and above. But if you look down sub 24, you do have that dead weight pulling you down potentially on the 3 month time frame. Although in the immediate vicinity, you have that 41 billion down at 29.2 and 40 billion at 29 even, as opposed to the same distance upwards would take you only into these 10 billion. So if you're going to come up to the 55 billion up at 32k and above, coming down to stop out these would still make more sense in my book. After the 29k region, it starts to taper on the 3 month time frame. You're seeing less than double digits all the way down to the 28k range. So coming down beneath that 29k doesn't make sense liquidity wise, unless they were going to immediately gap down to this 24k and just Bart Simpson their way down there, which is not a possibility of zero. It could be a possibility at some point. If we go to the 6 month time frame, we do see that there is some liquidity up above here. 100 billion at 32.1, 70 billion 32.4, 100 billion 32.7, 100 billion 33 even, 122 billion 33.3, and 95 billion 33.6. So that path is paved should it take the opportunity to reprice up into these regions. When do they get satisfied with the liquidity below is the question. 29.1 has 53 billion and 33 billion 28.8 and starts to taper to single digits at 28.5 and 28.2. and only starts to thicken at the 27.6 region. So once again, unless they're intending to Bart Simpson down to these juicy $100 billion pools, 142 billion at 24.6, 178 billion 24.3, and so on and so forth, you got a large pool down below sub 25k. So unless they intend to just Bart Simpson down to 25k, there's not really much in these candles. And that's where, if it's smooth up, it comes down smooth as well. If it does break these levels, there would be no reason to stop here. It would just come straight down. If we go to the 2-year, two-year time frame has that juicy 175 billion at 32.4, 181 billion 32.8, 197 billion 33.2, and yeah, you got that largest pool down at 24.4 at $241 billion, and 117, 141, and so on, sub 24 as well. So it's either going up to the 32k region and repricing up in this area, or Bart Simpsoning its way down to these regions in the coming days. So in a similar fashion, if we go back to here, we had this range break at 21k and the idea of coming back up to these regions, but then you had these sub 17k pools building, and we just gapped down and took them all out with a kind of Bart Simpson-y vibe, but put in a lower low in October. Could you be doing somewhat of the same thing? You do have larger pools up here than before in terms of payout. That's why I was saying coming up to the 33.2 region and tapering at that point, because you have 175 billion at 32.4, 181 billion 32.8, and 197 billion at 33.2. So coming up to these regions and fatiguing off of some of this liquidity before you retrace down to the 24.4 makes more sense to me in terms of structure. However, they've done these things where they leave 155, 162 billion on the table and retrace at that point, and then come back to it with a fury later after they've let it build. So the intentions are not purely obvious to the market maker, are not purely obvious to anyone. It takes a huge amount of analysis day in and day out to even begin to start to understand where they like to pivot off of. So as they pivoted off of this 24 billion here and started to shift up into the liquidity here, as opposed to leaving these guys alone for the interim, are they going to come back to these guys at the 29.3 and 29.2 with that $40 billion just chilling there for them to take? I think it's more likely than not that we come back to this and spawn some divergence off of that to see if it is worthy to come up to that 32k region. I'm open to the idea to be wrong, but that's why I'm flat at the moment, waiting for some sort of divergence of some kind. So let's go into the Binance chart and take a look at what we put out yesterday. We were saying at this pivot here with this wick, when we saw that liquidity pinged in here of that 109 million and they were coming back to the 100x, I was like, they could likely come up to this region. We put out the region for you here with this little liquidity pool arrow. They reclaimed it, so I'm going to delete this now, and they came back past the 886, and we'll find out where that why that place in a moment. It's basically having to do with the momentum, so we'll just turn that on now actually. So let's throw on our momentum indicators. Here we go, heads up display on, link in the description for more. Go to features, toggle everything you want to see within the suite, or see each component as we go over it. and it came up to the adaptive moving average. You can go up to the adaptive moving average, a sensitive yet stable moving average which factors out noise and displays an accurate place where price will experience resistance or return for support. Think of this as a second line of defense or hurdle to overcome. Crossing this implies a trend reversal, so we did not cross this yet. This trend adaptive moving average got rejected off of it immediately and came back down. So we totally negated this fib range, so this range has been reclaimed. Oops. This basic bearish one is also negated, so we'll look at a larger one. The larger bearish one is over here, so we're going, this little mini one did not play out, so we're going to reassess and write the ideas here. So let's take this off, and we're going to look fresh with a fresh intention here. So let's go to the higher time frame and begin to look at everything with a fresh set of eyes. So we previously have this impulse retrace idea on the daily time frame for these 32K and above regions. It's still valid until it's not. Once we break this low of the 29,498, start putting in lowers than this, then I'm going to delete this as an idea on a daily time frame. But until that time, it's going to remain here. If we look at the daily time frame retrace level for a bearish fib, we could take this wick from the top of the daily time frame, go all the way down to where we went to, basically at the bottom here, and then we retraced to the top, which was here as of this moment, which was up at 30,381. So your entry level at 29,882 at the 236. When you fail that, you could come down to these regions if we are coming down to a Bart Simpson-esque idea. That would be what this would ensue on a daily time frame. Let's go ahead and take a look at what the daily time frame is doing. We got the Williams reset in a manner here with the green, oversold green region, and the money flow beneath the RSI, suggesting at some point you do get a bounce on the daily time frame of some way, shape, or form. We did have that here. Every time you get to these levels, you do see some sort of bounce of some kind in the days that follow. So are we going to see a daily time frame bounce on BTC? Let's go to the 3-day, which I believe closed alongside the weekly. Let's go ahead and take a look at that. Daily time, 3-day time frame has, yes, closed as of this moment, and let's look at what happened with the cross down event. We're flirting with the idea of a cross down, which did occur back here and had a huge drop thereafter. So we're getting the cross down potential of something happening on the 3-day time frame. 3-day is slowly making its way down of being overbought, and you're getting that flirtation of the alarm of the cross down event as well. The last time we had this in this overbought status, we did see that retrace into the oversold region, which took a good month and some change. Actually, that took like 90 days if I'm not mistaken. 60 days. It took about 60 days to get out of that retrace. So these 3-day time frames take some time because each candle is 3 days. So that could mean a good retrace is inbound on the 3-day time frame if we don't negate this cross down event. It's not yet crossed down, of course, but we'll see where it stands in the next 3 days. You got 22 hours for the 5-day. 5-day is failing the baselines. Still, baselines are above the price, suggesting that you could come down here on the daily 5-day time frame. You are getting that overbought on the Williams and stochastic idea. The money flow does want to come up on you. Let's see the weekly. Weekly time frame overbought. Stochastic KD lines did come up here. Let's see how we closed it out. We basically dropped and came back up within that framework. We went all the way down to the low at 29,523, came all the way up to the high at 30,388, and closed at 30,072. and opened at 30,227. So we had a fair amount of action, but did not really close in much from last week actually. And as it stands right now, we are breaking the 30K level, starting to come back down into that liquidity, as we said would possibly happen with all these longs that are pinged in here, as opposed to the shorts, which they just cleared. So coming back down to that idea to the downside would be idea to think about. Also, you're seeing the potential suppression of the baseline starting to taper here, and they are above the price, which is expressing the first sign of fatigue. In terms of a lull, we've seen this kind of wide angled lull, and then it drops down and gets bought back and continues. So the lull effect of the baselines yeah, I guess eventually you do start to break down, and then when you have that cross down event, it's a doozy. So this is the first signs of where you start to see that fatigue, unless you can start to bring it up from these regions. You still have a week for this to close, of course, but seeing the candles close beneath the baseline is showing that first sign of fatigue. We've had on the daily time frame this cross down event from July 2nd, which has been in effect since then. On Thursday, July 13th, you did see a surge up out of that region, but a sharp rejection ensued on the following day, and we were back beneath the baselines ever since. Now we are starting to see with this last daily close an attempt to reclaim the thin boy baseline. So do we reclaim this and start to make our narrative to cross up out of this and maintain this cloud idea? When you bounce through the cloud and you bearishly retest it like this is something that looks like it could fail in a manner here. There are times you do break down out of the cloud on the daily and then find some support and surge out. So this is something we could see similar to February 13th. If we look at the stochastic in this manner, we were seeing the money flow. We had hidden bullish divergence on the money flow and on the RSI, and we had come to the oversold region on the Williams on the daily, and we were maintaining the super trend. Let's see how it compares. Money flow is beneath the RSI. Williams is also in the green. So you're in these good regions for a long idea on the daily time frame, similar to February 12th, where we see this surge up. So this would also make sense within the narrative structure we went over on the 2-year time frame, where you have that 32K region, 33K, you take that liquidity and then sharply retrace to the downside. So we could come to that 24K region. This could be a fractal like pattern, like if we take this thing here, take the bars pattern here, easier said than done. So like we could come down to these regions here, and then we surge up to the 32K thereafter, and then start to make our narrative way down into the dumps. Something like that. But yeah, just seeing that daily cloud idea, kind of reclaiming the cloud on the daily time frame. Still waiting for those wicks to give this nice fulfilling idea, perhaps, as everyone starts to get bearish and think Bart Simpson is that when we surge out of there in this manner, and then we take out that 33K region and then come down. That would be an interesting narrative to see. If we go to the lower time frames of the 22-hour, time frame is showing the cross-up event on the baselines. You have bullish divergence on the money flow, and stochastic is getting overbought, but it's just perhaps getting to a region. You did have a previous rising sun a moment ago, which has just changed, so you could be seeing some meandering down here on the 22. Looks like we are now breaking 30K, and that initial idea I put out yesterday with this downturn to 29.2 could be that case as of this overbought status on the stochastic RSI. Williams is still in a position here for continuing, but not showing much strength off that candle close. The 12-hour time frame had that previous money flow disparity between the RSI and the money flow starting to come up here to the RSI, and potentially getting a cross-up event on the Williams, also getting to a position there. So the Williams is in a good spot on the daily, the 22 and the 12. So that's when you're starting to get into this like juicy retracement zone, which is good for a potential swing long idea. When did they have these before? You get to that green zone back in here, and even in that region, had you entered off of that, you could just take it for a 7% run, and that's where the probability for the reward, the risk reward ratio, emphasis on the reward, goes up. So that's why I wait for those moments. I want the reward to be juicier than the risk. So yeah, we're getting to that region with the Williams being in that fertile crescent. It's not the nicest of structures. It could still come down further. We are in a bull market, so the value in which it starts to turn up, it doesn't reset completely. Whereas if you go back to times where it was kind of bearish, like back here, we went all the way down to that negative 92, almost full reset. And same here, we went full reset, and those would be those nice double bottom ideas. See, the double bottom, like taking just the single one would have had you in a position, a bad position here, waiting for that double bottom idea and seeing this rising sun thereafter. That was your key moment in time on March 12th, Sunday, coming out of that region. I remember somebody was looking to short there, and I was talking about the 618 bounce and potential coming out of that region. I was still, like everyone else, bearish from the Silicon Valley Bank thing, but it played out nonetheless off the 618 bounce there. So let's go back to here. Let's actually do a 618 from this fib level here. We're gonna pull this up here and do the pocket. The pocket of the fib takes you to 27,294. Not really much there in terms of anything else but a fib reaction. This was already reclaimed, so we're gonna delete that. I don't know why that's still there. This one too. So on the 12-hour time frame, the Williams is getting into a position here. The 12-hour reaching that 50 point where it could get rejected off the 50 point and come down here and reset and decide it's ambiguously not ready. Let's go to you do have the cross up event on the 12-hour still intact. These crossover events are meant to show you that first sign of reversal. 6-hour has been also holding nicely with that idea of the cross up. Been playing some games with it, but holding nonetheless. And you're seeing this cross up of potential piercing and closing above the cloud, now failing beneath the cloud. Cloud on the 6-hour is curving in a manner here, which is interesting to note. 6-hour time frame has been recently giving some interesting curvatures preemptively. If you, I remember testing out some of these curvatures before these came inbound, similar to this too, seeing the curvature here. So are we seeing the curvatures of something before it occurs on the 6-month time frame, or sorry, 6-hour? 6-hour getting overbought here, not really having an entry point as of yet. 6-hour time frame and 12-hour time frame are stochastically fatigued, while the Williams does have room to continue pushing up on the 12-hour. If we go to the 4-hour time frame, 4-hour time frame overbought with the money flow above the RSI, suggesting a fatigue and push down at some point. You are at the 80 level, so you could see some meandering around for a good 12 hours plus before another surge up on the 4-hour is seen. 50 level on the Williams showing an ambiguous idea, not super keen on the entry level. If we look at the cloud potential, we came out from piercing the cloud. We had rejection of the cloud, slowly starting to shift the cloud. One thing to note of bullish narrative is this thinning of the cloud, which we're coming back to as we speak. So this thinning of the cloud on the 4-hour time frame is suggesting that there is some sort of inbound play. Similar to here, we had a thinning of the cloud. While it did meander around, eventually it did shoot up. So something to note on the 4-hour time frame is this thinning. And if we go to the trend cloud, you say, what is this thinning, you ask? Well, a volume weighted cloud formula which expands and thins according to the amount of volume present in the asset. Price tends to gravitate and retest the cloud as a point of resistance or support. Thick clouds represent strong trends, thin clouds represent weakness or consolidation. Keep in mind, when the cloud thins, a potential expansion or reversal is in. So when you see these like kind of kiss points on the cloud, you can see that type of potential expansion idea as we go back to 30K. All right, so interesting on the 4-hour time frame, we are overbought on the stochastic and the money flows coming back down right now. It looks like this is a retest idea on the 4-hour time frame. If we go to the hourly cloud kiss as well. Yet last night, so last night or yesterday, if you were a risk averse trader who just likes trading the weekends or had time on your hands, this cross-up event from after the live, which we pointed out, did come and reclaim the cloud, and you had this thinning of the cloud and you held it, and basically around 10 p.m. my time we just shot up there to that adaptive. So is this your retest of the support of the cloud and confirmation to continue higher on that time frame, or are you going to go down into the depths below to reclaim some liquidity down below on the external time frame? On the 1-hour time frame, you're starting to see the Williams also resetting in a manner here. You got the cross down event confirmed, and either way it would take some time for this to reclaim the baseline. So even if this cross down event plays out, it takes good six hours or so for that to scoop up the price in a nice manner for me to like it. I don't play the cloud kisses alone. The cloud kiss alongside the cross up event, or the potential of a cross up, would be the ideal. All right, so let's go to the 15-minute. So Asia is dumping it for the Asian session. They're sending it to the downside. Interesting. So the pre-market pushed it up and Asia is taking it down, as opposed to doing their false pump dump. So is this dumping into London, which will pump it? We'll see the 15-minute now. The momentum is strong to the downside, getting this reset on the Williams as well. If we look at the 5-minute, cross down had you at hello at about 30, just as we were going live, and we're starting to come down here with some volume as you're seeing some vector candles appear here. Let's see what's happening on the liquidity as we go into this. Shout out to everyone. All right, so if we take a look here, it looks like they're coming down to this potential 29,828 region at 87 million, and below coming to these regions down here, 29,583. Yeah, these characters which have now caked themselves up in nice form with the 100xers here. Hopefully they're trimming as they go, because it looks like they're coming back in to stop these guys out, and they go up to go down and go down to go up. So going up to here to stop out all the shorts while they continue is the idea here. So this is another ABC to the downside. And we talked about how the 5s are your key zone. Anything above a 5 is generally pretty good in terms of a risk averse trade. And after our live, coming off here on the live, you would have seen on the 5-minute the 5 flash. I saw that on my phone over the weekend. Did it cascade to the higher time frames? It did. On the 15-minute here, it closed the candle with 5 time frames oversold, and then you were gone. What is this little 5 symbol? It is the stochastic array. Hopefully you use these dynamic alert systems to see this on your phone, where it tells you the 5 time frames oversold. What do you want to do? It's holding this level. You can basically take it for what it's worth. And conversely, if you get these 3 time frames oversold. So as it stands, I'm looking to position into a long at some point. I think the fatigue on the shorts, I don't know if the Bart Simpson idea is a valid idea to have. We'll see, but coming down into these 29.2 regions would be a nice little blessing to have in disguise if it comes down to here. All right, let's go to the total and take a look at the total market cap. Total market cap has reclaimed the 236 level for the bullish continuation move to this level. Once again, it has been holding, has not dropped beneath the 236 level for the bullish play, different from BTC, which has dropped beneath the 236. So this is the total market cap of all crypto. So this is including Ethereum and all the alts. So that's why it's holding. There's some bullishness to the total market cap, more so than Bitcoin as of the moment. If we look at the total 3, if we take this, also the trend-based fib level on this idea, we have yet to reclaim the 236 of the bullish narrative for the alts just yet. Could be seeing some retracement on some alts some more. Let's look at Bitcoin dominance. We're talking about the dominance of Bitcoin going up here. We got the curvature of the cloud insinuating this as well, and the thinning of the cloud. So even if we come down to a point here, we are starting to see this idea of potentially coming off and going higher on the dominance. And if we go to the USDT dominance, people getting kicked out into USDT. It's holding these cloud ideas. This is also showing that insinuation of the thinning, and then it kissed the cloud and continued, and it's maintaining as it starts to go up more. So if the USDT dominance and the Bitcoin dominance want to rise in tandem, this means that people are going to get kicked out into USDT as Bitcoin drops. So, or the alt pairs with the ADA BTC or whatever, they get kicked into BTC as BTC drops and the alts drop hard. So if we take a look at this, $236 is your entry model for this idea. Let me make sure this is accurate. Let's just take it to the tippy top here. Alright, so 29,877 breaks this 29,877. You could be coming down to, this is why if I use too big of an impulse, it doesn't give me the accurate thing. So I use the actual impulse, the actual bottom, and the actual retrace. Like, you could use that stuff too, but yeah, coming down into this region, the 29.1 region. So this is the prediction. You know, just to reiterate, I had this idea out yesterday, and that's kind of continuing into that idea now. So we're breaking down as it stands. We got that liquidity grab to the upside and pinged in some longs, and it looks like we are heading lower. So this is just, you know, coming back 3 days ago, remember I was talking about like a ABC within a ABC kind of idea. This is a ABC down to here. So seeing a lower low put in is where you can get like that juicy kind of entry potential. We'll play it by ear as we go. Yep, 29.4. There's some liquidity down here. The thickest region down in the 29.2. Yeah, 29.2 clears this entire band here, and also the external liquidity range. So the thinning could also mean the expansion to the downside too. It just means an explosion is inbound kind of thing. Let's look at DXY. Let's see how the dollar's faring right now. So I was having this idea for the double bottom, and it's been playing out thus far. So as the dollar starts to make its ascent back up from the depths, murky depths that it put itself in, as people take profits on the NQ and ES, and these things start to come down some more, getting the cross down on these ideas. As we start to retrace down into these regions, we're starting to see the profit taking going back into the dollar perhaps. And as the dollar value rises, Bitcoin's value decreases, as they are inversely related. If we look at the gold is also decreasing. People are taking their value out of gold, perhaps putting it back into the dollar. Is there some news that we are missing for this week that is inbound? Let's see what is in the works. Not really much. Let's go to tomorrow. No. Let's go to consumer confidence. Oops. New home sales. Not really much. The FOMC statement. Okay, so there's the federal funds rate meeting on Thursday. So they're setting up for Thursday's FOMC statement for whatever that is. So taking their money out of gold, possibly putting it into the dollar for some sort of bullish narrative for the dollar, and then that also brings this down a little bit as well. USD dominance, people getting kicked out into USDT, as well as Bitcoin dominance rising as the alts get a little bit more of a retrace down. If you do the bearish narrative for the alts, coming down into this region. I like the 618 idea though. Let's leave that there. So yeah, this is False Move Monday. I expect some volatility for today. Where is our psychological level for coming up? We had our first high and low put in. We're breaking this low, possibly coming lower into these regions. I'm here for it either way. So coming down to that 29.2 region is still what I've been saying over and over and over. So I hope that this comes down to that region to be self-fulfilling. If we look at the time frames of what we're overbought with, we do have the 6 hour overbought, didn't really take you anywhere, went sideways essentially. 12 hour did much of the same. You got overbought and didn't go anywhere. If you look at the line that we've crossed for a bearish trend line, we didn't really go anywhere. So coming back down some more. If you go to the 22 hour, you are having the cross up event potential, but getting overbought and haven't really gone so far. I mean, if you took it for what it's worth, you would have seen some decent 2.4% and pay yourself as you go kind of thing. We're looking for more of a swing trade idea, but scalps are good too. That's why the baselines are a scalper's dream. Ultimately a scalper's dream, as it says in the description. So you would be able to scalp that for 2% right there. So for False Move Monday, what do we expect? Well, based on the liquidity, seeing all these longs that were pinged in here on False Move Monday and are now trapped based off their entries here, that they are coming down to grab these guys now. So they cleared all of the shorts all the way up to that region of, 30,004 almost. And they cleared all those shorts and then only pinged in a few shorts as they pinged in more longs. So they got what they came for, which was the shorts, and then they got what they trapped, which was the longs, and now they're heading down into those regions. So as we break this 236 of the bearish trend based fib extension level, we could be coming down to that 29.2 region on the external liquidity range. We have been holding the ATR levels of this super trend on the 22 hour time frame, which is interesting to note. So always pay yourself as you go and protect your entry at all costs. And yeah, that's about it. I'll be taking any suggestion you have. If you want to see something, CNC, you have anything you'd like me to take a look at, now's the time to ask. So far we're holding this cloud in a ambiguous way here on the 4 hour time frame. Liquidity suggests going lower. Let's go take a look at this liquidation events. Yeah, you just got more down below as of this moment. What would you like to look at, my friend? quite interesting though, if you like look at everything for what it's worth, right? Like I told you yesterday, if you take these 4s and these 5s like just blindly, like you don't watch me, you don't do anything, you just look at the alerts to your phone. There was a time I did that. Like here, it'll pull up my account email address. So there was a time I had a trading log, which I logged for 3 months while back testing the indicator, and I just took blind entries off of these stochastic array things, and they're pretty profitable if you can handle like stop loss hunts and take them at face value. They will pay you, you know, in time. So it's kind of a interesting thing. It just depends on how well you can sit through the drawdown if you do. So these 4s and these 5s kind of end up paying out, and then if you pay as you go and you set your stops in a profit, it's a profitable thing to follow in general. And then this is where the higher high and the lower low look back come into play, because if you just take them blindly without monitoring whether you're going into lower lows or higher high territory, if you get those and you're not making a lower low, then they're pretty solid to take. And if you get 5s convert with while you're breaking structure and stuff and making lower lows, then it's best to ignore them until you start to stabilize. So when you get this 6 back here, for example, so back here when you were getting 6 time frames fatigued and you weren't making a higher high, that was a perfect opportunity to short. And we were talking about that the other day when we were saying that you basically had this fib level. Oops. We had the fib retracement. No, it wasn't here. So we were looking at the fib level rejection here. We were saying look for a rejection off the 618, and we did once and twice. It gave you 2 entries off of that, and you could have taken that for that fatigue level since we weren't making a higher high. And I saw a lot of longs pinged in here at the time, and that was a perfect opportunity for a short. Now we're looking for that opposite effect where we're not making a lower low and we're getting these 6 time frames oversold idea too. And you see how these kind of play out when you get the circle, which is the lower time frames, plus the diamond, which is the medium time frames, and then if you get an X all together, that's a majority of everything. That's a pretty solid play right there. So it's just about being patient for that idea. You had the 5 there that was pretty solid. So are we going to see another 5 or 6 come inbound in the future soon? Looks like it's heading in that direction. Let me go ahead and turn off the higher high and lower low. I don't need it personally, but that was when I was using to back test the theories. All right, so all covered USD. That's me happy. Nice. Yeah, so the USDT dominance, like I'll just be thorough just to make sure I'm seeing it correctly. Like we're seeing this kind of like bullish narrative play out for the USDT dominance. It looks like it's reclaiming possibly a, you know, right here locally, shoulder, head and shoulder, kind of making its way out. Are getting 4 time frames overbought as we go. We are reclaiming this adaptive on the hourly, or so it seems. You did have a rocket ship on Friday that was starting to play out here. So you're starting to get some rocket ships which insinuate a larger time frame narrative of the daily and the weekly starting to play out. So you could be seeing this reclamation up to this level of the USDT dominance, although we are getting fatigued here on without making a higher high. So the last time we did see this potential on the 4-hour, it did fake out. So just to be aware, we did see we saw this kind of Where was that? It was on the 6 hour? Yeah. Maybe it was this cloud here. We were seeing the rocket ships on the lower time frames, and we were seeing this cloud bending, and then that's when they had a surge to inject up. So as it stands right now, it looks like you're rounding out a double bottom idea for the USDT dominance. You got kind of complex inverted head and shoulders happening, with this being your head, and a deep retrace into this local bottom area here. You wicked off of that area here. So retracing back into some of this candle would be an idea for the dominance to come back to. If you're looking at 6 hour resets are starting to occur here. I just want to be sure what I'm seeing is real, you know what I mean? 12 hour wants to come down, which means injection of some kind of I mean, this trash consolidation just could be a B wave to go down further as well. If we look at the daily time frame, we've basically been in this range for 30 days. So the USDT dominance has not gone up or down, essentially trading in this range for 30 days or more. It looks like we are starting to try to come up above this cloud that has been seeing the sell-off. And by sell-off, it going down means people are entering into trades using the USDT. It's kind of counterintuitive to think about, but I just say it to myself as well. This going down means people entering into trades with their USDT. So going up means getting knocked out into USDT. So that's why the dominance goes up. So are we going to see this pierce the cloud and hold it? It's not going to be a straight line, obviously. You'd be seeing like a pierce up and then a rejection and then a continuation idea. So it would come up to a region within a lower time frame if that were the case. Wednesday. So it looks like the FOMC statement on Thursday that is coming, as people are positioning into the dollar and possibly getting out of gold and repositioning into the dollar for some sort of news play on that. Could be the thing as people take profits on, Netflix, Nvidia, Google, Tesla, Apple. All of these things are taking profits and seeing downside as the Nasdaq also dips. Are they setting up for a week of a retrace idea? Looks like it could be the case. Coming down to that 29.2 is what we want to see. Getting that little rejection move play happening right now as we speak. I mean, even if you come down to there, that's like nice, but I'm expecting a reaction of some kind down here. What type of reaction? I mean, we still have lots of days before Thursday too. We'll see. And that is my story, and I'm sticking to it. So thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same, bringing the fire, the precision, the accuracy, all that fun stuff, and we will catch you on the flip side. Peace.